Good morning, everyone. This is John Sakowitz with Jay Johnson at Truth About Money here at KZYX. Good morning, Jay.
Good morning, John.
Well, here we are again. It's been another week. We have a great show planned. Later on in the show, we're going to have Reverend Graylin Hagler and Bruce Marks, both of the Neighborhood Assistance Corporation of America. Reverend Hagler is also the national president of the Ministers for Racial, Social and Economic Justice, and we will be talking about the whole farce of the Fannie Mae and Freddie Mac bailout. There's a lot more to it than it would seem. I spent the last couple of days in Washington, D.C., where I actually wrote about this housing bill for the Bohemian, and learned that our the ceiling on our national debt has been raised to 14 digits, to some $10.6 trillion. That was buried in the bill. And this Fannie Mae and Freddie Mac bailout would seem to be a little more than a corporate bailout, and not just a bailout for those two mortgage institutions, but also for much of Wall Street. I'd like to start out, as we usually do, with a market recap. This last week in the stock market has been extremely volatile. In this last week, we've seen the price of oil shoot up and down. Stocks seem to rally whenever oil falls, and when the price of oil rallies, and there's been about a $20 to $25 swing in the price of oil in the last week. Whenever the price of oil rallies, the market seems to tank. On Thursday, the Dow Jones Industrial Averages rose 186 points to 11,583. On Tuesday, it went the other direction, again by about the same amount. So 200 points up one day, 200 points down the next, 250 points up one day, 250 points down the next. It is the third consecutive triple-digit movement for the Dow, again reflecting its volatility and uncertainty, and that pretty much rules the day for the markets. Investors can't seem to make up their minds about whether the tight credit market that we're seeing in markets like the mortgage market has plagued Wall Street, or whether this credit situation, this credit crisis will abate, or whether it will worsen. And that's a huge uncertainty because, again, it's a multi-trillion-dollar uncertainty. Fannie Mae and Freddie Mac either own or guarantee some $6 to $7 trillion worth of mortgages. The markets seem to be suffering from what one analyst calls bipolar disorder, as it cycles between mania and depression. Edward Yardeni, an analyst I have a lot of respect for and who's been very credible on the street for a long time, has said that during these, and I'm quoting directly from him, during these manic days, the price of oil tends to drop while financials rally. During the depressed days of the bipolar cycle, financials tend to drop and oil rises. Investors seem soothed by the news that the Feds will allow investment banks to have access through its lending window, something known as the discount window, for at least through the next year. Again, this is a hidden tax that...
Rough. They don't have levels correct.
Guys, how's that? Check 1 2. Check 1 2. Check 1 2. Better. Can we come back to the show?
Where are we?
They're on music right now.
No, but where did they cut off?
First paragraph where you were just talking about volatility. Going back on now.
Okay. Once again, we're giving a market recap here. Many analysts are calling the market bipolar. It seems that as the price of oil rises, markets drop. As the price of oil drops, the markets rise. I was quoting Edward Yardeni, a chief investment strategist on Wall Street, and I'm quoting him directly here. The market seems to be suffering from bipolar disorder as it cycles between mania and depression on a weekly, if not daily, basis. During manic days, the price of oil tends to drop while financials rally. During depression days, the financials tend to drop and oil rises. The other big development during this last week in financial markets on Wall Street was that the Federal Reserve Bank announced that it would keep the discount window open to the broker-dealer community. The discount window is basically the borrowing window. Up until this year, it was only open to commercial banks, banks like Bank of America or Wells Fargo or Citigroup. Since Bear Stearns blew up, the Fed is now opening that window to the broker-dealer community, meaning the Merrill Lynch's and UBS's of the world. And as something that's really gone unreported in financial markets is that the broker-dealer community are borrowing billions and billions of dollars from the broker-dealer window. Again, this is an off-the-books liability to the American taxpayer. The final major development on Wall Street this week was the announcement by the Securities and Exchange Commission that it would extend its restrictions on short selling, but only for a select group of financial stocks, meaning that the very banks that caused the financial crisis in this country are now being protected from short selling. What do you think about that, Jay? Do you think that's fair?
Let me get this straight. The government is saving short sellers from the inherent risk that is in short selling.
Exactly. What about the world am I not getting?
We need to start a large corporation so we can take risks and real risks and fleece the American public and then get bailed out by the American public's tax dollars through our elected government.
And then have the stocks of our companies protected on the downside from short sellers.
And then take our golden parachutes when we screw up.
Exactly. And we're going to get to the golden parachutes at Fannie Mae and Freddie Mac with their guest. In international news, the big story was the WTO talks. And I'd like to actually offer our listening audience an opportunity to tell me whether they'd like to have us pursue that with some very interesting guests. In the WTO talks, basically, China asserted itself. Actually, they're becoming the most dominant force in international business right now, and the United States, maybe because of this credit crisis, maybe because of our loss of integrity in Iraq, maybe because of a lot of things, we're really taking a back seat to China. China announced that they will not relax a lot of their trade restrictions. And they are signaling basically an abrupt about-face that it will back off in its interest in free trade with its concern